Hey everyone, welcome back to the channel. If you're looking to buy a home, the first step is to get pre-approved. But what does that actually mean? And I've got Ben from Waterstone Mortgage to break it all down for you today. And here we go. Hello everyone, welcome back to the channel. To the right of me, I have over a decade of industry experience in mortgage lending. Let him introduce himself.
Hey everybody, I'm Ben Hoy with Waterstone Mortgage, and yeah, I had a lot less gray hair over a decade ago, but super excited to be here with you today, Val. I'm a mortgage lender with Waterstone Mortgage. I've been doing this for 13 years. I'm an Orlando native. I live here in the Central Florida area with my wife and two sons who keep us busy outside of work, and other than that, I'm dedicated to helping people make the dream of home ownership come true. So,
well, appreciate you being here, and I'm excited for what our viewers are going to hear today, and for you to share the experience with them. So first question, I have a lot of questions with my buyers. They have a lot of questions. I've polled them, and these are kind of the top questions they have for me. So I'm glad that I'm able to ask you today here. First one is, why getting pre-approved is your first step to buying a home?
it's a great question. So think of a scenario where you're interested in buying a home. It's weekend morning. You're looking on Zillow at homes that you like, and then all of a sudden, just the perfect house pops up. I mean, it's got everything you want, location, size. Pictures look great. You look at the payment estimate that Zillow gives you for what the mortgage payment would be, and then you call the Vel. You say, Vel, we've got to go see this house. Right. This is the one. You guys check it out. You fall in love. You're imagining where the beds are going to go, where the couch is going to go. You've moved in, right? You're ready to make an offer.
You're there mentally.
Oh, 100%, yeah. Right? I mean, you're trying to hold them back from the excitement. And then you say to them, okay, well, to put in an offer, we need you to have a pre-approval, right? So now you talk to a lender, and when you find out the monthly payment, all of a sudden that monthly payment is different than what was on Zillow. And you didn't realize that, and I'm not picking on Zillow, but a lot of these, sites that are out there, will give an estimated payment, but that payment is not tailored to your financial circumstances.
Right.
It may not be based on the amount of money that you can put down as a down payment. Oftentimes they'll use an assumed 20% down payment, which not all of us have. There may be an estimate for home insurance that may not be realistic for what insurance costs in this area. Property taxes may not be right. So the number you're seeing online may not be the number that applies to your loan that you're approved for. That's the example of why it's so important. Even before you really start looking kind of hot and heavy online, talk to a mortgage lender. If you're interested in buying a home 2 years from now, talk to a mortgage lender. We're happy to give you information. I'm happy to give you some guidance, even if it's way down the road. But if we can give you an estimate of what you can be approved for based on your circumstances,
right,
how much money you can put down. And not only that, but what payment are you comfortable with? Because I've had, plenty of situations where somebody was approved for an amount that was here, but when they realized that payment was maybe at this number, they weren't comfortable with that. And we've often revised numbers down to make sure that somebody is comfortable with what their budget's going to look like. Right. So that's why getting a pre-approval is so important, to know those numbers up front, specific to your situation and your financials.
Yeah, and I could for sure guarantee that scrolling with a pre-approval on Zillow is going to feel way better than not having one, right? For sure. Like, I can afford this house. Yep, this is another one. This is another one, right?
And you've probably seen this where, it's similar to if you're looking at some of these listings on any site, sometimes a listing photo will have like virtual furniture.
Yeah, virtually staged, and it's like, it looks like this. You get there, it's like the size of a closet, the room, right?
Right. But it had all this nice looking furniture, right, and the big TV or whatever that isn't actually there when you go to see it in person. So knowing the reality versus kind of that imagery is important.
For sure. Good stuff. Second question that's pretty popular is, what do lenders look at when pre-approving, right? A lot of my clients say, well, what do I need? They feel lost. They don't know what to provide. What's something that lenders really need for pre-approval?
Yeah, so I know a lot of people out there feel like they need to come in with a vial of blood,
right?
And blood sample and
the whole works, medical history,
life story, full confession. I promise you, it's not that way. So what everybody's financial circumstances are different, but there's really three big things that a lender is going to look for to determine if we can approve you and for how much. Those three things are your credit, your income, and income with your budget, and then third is going to be savings. And you need good enough credit to qualify. It doesn't have to be perfect. You need some kind of documented income to be able to qualify for the payment, and there needs to be a source of money for a down payment. Those are high level. Those are the three things. Now, people have very different, unique financial circumstances. There are very unique loan programs out there. So, is there a loan program where we don't need to see a pay stub or a tax return? Yeah, there is. There's a loan program where you don't need to show any income, but those are going to be a little bit out of the box. So the common experience is those three things, right? Is good enough credit, some kind of money for a down payment, and some kind of income that we can document.
Nice.
Yeah.
Thank you. Appreciate it.
Mhm.
And I guess another one here is that they kind of went in the same pre-approval and a pre-qualification, right? Some people start looking on Zillow or shopping around with a pre-qualification. But what's the difference? Pre-approval, pre-qualification.
Yeah, and you've probably seen this as buyers have come to you, and this can be confusing. Different lenders sometimes will call their pre-approval letters by slightly different but similar sounding names. It's
Yeah.
a credit approval, it's a pre-approval, it's a pre-qualification. You've probably seen that with
Comes in the
buyers yourself.
mail. Buyers are showing me, hey, this came in the mail. I think I'm pre-approved, right?
Yeah,
Mhm.
yeah. Sometimes those are the in advance kind of thing.
Yeah.
So these can be a little confusing, and it's important to confirm with your lender or have your agent confirm that what you have is a pre-approval. And the main difference is a pre-qualification can be basically a conversation, and that's not very well vetted. So if you tell me how much money you make, but I don't know that part of that is from commission or from a one-time bonus, then I might be incorrectly approving you. And so as a lender, it's important that we receive your documents up front, your basic pay stubs, bank statements, so that the information we're receiving is verified. And that's important to a seller, right? The seller
Right.
wants to know that this stuff has been checked. So a pre-approval does that. We've collected your documents, we've pulled your credit. It's not just a conversation. We've run it through an underwriting system. It's as vetted as it can be and verified as it can be.
Sounds
And
good.
I think just to add too, I think
Yeah.
that's important. If you're a buyer, is it a little bit extra work to have to send some documents? Absolutely. But I'd hate to be in the position where I think I'm approved, and then all of a sudden, again, you get halfway through the process and find out that there's an issue.
Yeah,
I think that can be a really, really stressful experience. We always want to avoid that for people.
For sure.
We want it to be smooth.
for sure.
Yeah.
Good stuff. What are common mistakes to avoid during the pre-approval process?
That's a great question. So a lot of people feel like once they're pre-approved, it's kind of like freeze tag. Like
Mhm.
don't move, don't do anything. And I promise you, conduct your finances as you normally would. Make your same purchases, your same expenses, but any big changes that you may be thinking of making, just talk to your lender first. It may be fine if you're looking to change jobs, if you're looking to buy a car, if you're looking to pay off debt. Anything that could affect kind of the number side of things. It may be okay, but you want to talk to your lender first just to verify it. But the mistake can be not checking first.
Right.
You quit your job and you start your own business, and then you find out that we can't count any income now, even though maybe your business is doing very well, but it's so early, just as one example. So there's some things like that. If you go and buy a car and now there's a car payment that wasn't there before, that might affect your approval. So just, again, have a conversation with your lender. Any of those things may be fine, but just talk with them first.
Nice. Good stuff. Now, another question here is how long does a pre-approval last and what to do if it expires?
Yeah.
Right? I know I have buyers sometimes where it may take 6 months to go find a home where they're only ready for a year. And I have to talk to them and say, hey, we might have to hold off at a certain time when we're a little closer to look for homes. What does that time frame look like for a pre-approval?
Yeah, so 4 months is typically the kind of the industry standard. 120 days, 4 months. But I would tell people don't look at that as a hard deadline. Don't feel anxiety about that. As long as, again, kind of your finances are the same or similar to what they were 4 months ago when you were pre-approved, we can renew a pre-approval, and it's very simple. We're not starting at square one. You're not entering an application in again.
Right.
You're not doing all this legwork again. It's a very quick and easy update in most circumstances. And we can renew it for another 4 months. And, everybody has a different timetable. You've had, I'm sure, buyers that, man, the first or second house they saw was the one.
Yeah.
Other people, I've had people who have been pre-approved for, over a year. And it just hasn't, worked out just yet. And that's okay. We can continue to renew pre-approvals as long as you're interested in still house hunting. We're there with you.
Nice. And another question that a lot of my buyers have, interest rates, right? That's always a hot topic.
Sure.
Now, with time frames, when would you suggest to lock an interest rate? I know that's something that some people are worried it may go up, and so instead of like avoiding that, what would you recommend there?
That's a great question. You typically can lock in an interest rate once you're under contract to purchase a home.
Okay.
Now, interest rate locks are for a certain number of days. So the rate that you'll see advertised, the rate that you see talked about in news reports is usually a 30-day rate lock, right? So you're going to be closing on your home within 30 days. But that's not everybody's case, right? You've had new construction homes that may
Right.
take months and months for the home to be built. So each situation can be different, but it's once you're under contract on the home that you'll have the ability to lock in the rate. And then at that point, I would talk with your lender. And, there's a lot of unique circumstances, how long you think you may be in the home, how much cash you have to work with. Those variables can impact where maybe one person is going to be better off locking in right away. Somebody else may want to wait, whether they want to pay points. That kind of stuff can be very unique. But yeah.
Nice. All good stuff.
Yeah.
Good stuff. What are some common misconceptions about mortgages and approvals?
Yeah, I think one of them is that lenders are kind of looking to say no or to decline people.
Right.
And as
We got to make it happen.
Yeah,
right.
absolutely.
We're here for our client. Like
100%.
Yeah. We're not trying to say no.
Right. We want to say yes. We want you to get to the closing table. We want as many victories and happy clients as possible. So yeah, that is one. I mean, we are your biggest cheerleader, and I'm here to work with you. And if we can get you approved today, fantastic. If there's some steps that you need to take to get there, great. I'll work with you. I can give you guidance on credit. I can give you guidance on how to save money or maybe resources to check. So we're your biggest cheerleader. A couple other misconceptions: 20% down payment. You probably heard that from
That's a
some of your
big one,
buyers.
yeah, and that's a big chunk of change, right? So we're looking at what, 20 grand for every 100,
Mm-hmm.
right? Our average cost of a home, we're looking at 400 grand.
Sure.
So people think they need 80 grand in the bank,
Right.
right?
Right.
That's not
big-
always the case.
It's a big number.
Right.
Right. If you have that, fantastic. But
Yeah.
a lot of people don't. So it's important to know in most circumstances, you do not need 20% down. We have programs where you can make as little as 0 down payment.
Wow.
Oftentimes 3%, 3.5% are very common for FHA loans, for conventional loans. And even if you're not a first-time home buyer, a lot of people think, well, I can only do that if it's my first home purchase, and hey, we're ready to move up, we're outgrowing this house, or I need to relocate, but gosh, I'm going to have to put 20% down now because I already did that low down payment before. You can do an FHA loan more than once. You can do a conventional loan more than once, and you can do that with a low down payment. If you've owned 20 homes in your life, if you're buying a primary home that you're going to live in, you can still put as little as 3.5% to 5% down.
Wow. Nice. Good to know.
Two other real quick just misconceptions I get. The 2-year job history.
That's a big one. I've heard of that one.
Yeah.
Yeah.
And people think that they need to be with their company for 2 years. And man, I got promoted last month. I'm going to have to wait till I'm in this new job for 2 years. Folks, you just need to have a 2-year work history. If you were delivering pizzas, if you were, an intern somewhere that was paid, as long as you've been working for 2 years, then you've met that requirement. And now the time and job, it doesn't have to be 2 years. So just keep that in mind. If you're waiting because you're waiting to be in 2 years in your job, call your lender. You may be able to qualify to that.
Another one I've heard is it has to be in the same industry.
Sure.
Is that a thing?
Typically not. Again,
Okay.
there's unique circumstances, but no. You
Okay.
could, if I worked as a nurse for 10 years, and now I'm working as a salesperson, I have a 2-year work history,
Sure.
right? So and I'm employed, and so you should be okay.
Okay.
Yeah.
Nice to know.
And then last one is just the credit. You know, credit these days, I mean, every time you log into your bank account, credit card company, hey,
Yeah.
you can see your credit, right?
Right.
Credit Karma, credit. I mean, there's a million places to see your credit nowadays, right?
Mhm.
And your clients, your buyers are probably asking about credit all
Yeah,
the time.
where are we at in credit? Do we have a good enough credit? They think they need to be at a 700 credit score, right? And so that's never the case, right?
It's a big concern. I know people,
Right.
you know, there's as much anxiety about credit as ever. It's kind of everywhere. You do not need excellent credit to buy a house. Does it help? Absolutely,
sure.
for sure. We love for everybody to have great credit, but the majority of people are going to have average credit by definition. And we work with a lot of folks that have less than average credit. So our minimum, the absolute minimum, loan score or credit score that we can work with is a 580. And I think a lot of people would be surprised to know that.
Yeah.
So again, a higher score is going to give you a better chance for approval. But if you're thinking you need to wait till you have an 800 credit score, please, talk to myself or another lender.
580.
At 580, you're in the ball game, right?
Yeah.
We've got
got a foot in the door.
opportunity. Yeah, foot in the door. Yeah, exactly.
Nice. Nice. All right, so then Ben, thank you again for answering all these questions that not only my buyers but typical buyer in the real estate market would have. Thank you so much. And if you guys have any questions regarding lending, please reach out to Ben at Waterstone Mortgage.
Pleasure being here, Bill. Thank you for having me. Thank you, guys.